This specific ETF in the past 12 months has returned 29.89%. This one has returned 25%, and here's another one that has returned 23%. Hey guys, it's Christina from Our Rich Journey. In this video, I am going to highlight 5 specific sector ETFs that I think that you should look into. These ETFs have been posting incredible returns. We're going to talk about the specific investment, ticker symbol, performance history, expense ratios, holdings, and more. And if you are not paying attention, you may be missing out on some of the biggest growth opportunities in the market right now. So let's get into it. So first off, we have VOX, the Communication Services ETF. So this fund focuses on companies that are part of the communication services sector. So it includes industries like media, entertainment, and telecom. So you want to think of companies like Verizon, Disney, and Netflix. So why is VOX a good pick? Well, the communication services sector has seen massive growth, especially with the rise of streaming services and telecom advancements. So investing in VOX gives you exposure to these growth companies without having to pick individual stocks. So VOX is perfect if you're looking to capitalize on the ongoing digital transformation and media consumption shifts. So the key benefit of investing in VOX, if you want to tap into the future of entertainment and communication while also reducing risk through diversification, VOX is a great ETF to look into further. So let's go over some numbers. VOX has a holding of 118 companies with 51.1% of the fund invested in interactive media and services companies and 14.8% in movies and entertainment companies. Its top 5 holdings include Facebook, Alphabet Inc. classes A and C, Netflix, and Walt Disney. Its expense ratio is 0.09%. Over the past 10 years, it has returned an average of 9.05% each year. Its return for the past 1 year has been 25.19%, and year to date, its return has been 10.9%. Now let's talk about VFH, the Financials ETF. Now this ETF focuses on companies within the financial sector. So this includes banks, insurance companies, and investment firms like JP Morgan, Berkshire Hathaway, and American Express. So the financial sector plays a huge role in the overall economy, and VFH gives you broad exposure to this sector. So that's one of the benefits of VFH. It's also a great way to take advantage of economic cycles, especially when interest rates are rising. And this is really important because financial companies tend to perform really well during high interest rates, which tends to increase their profit margin. So the key benefit of investing in VFH, if you are looking for stable income-producing assets that are highly sensitive to interest rate movements, VFH could be a great addition to your portfolio. So some key stats. VFH has a holding of 416 companies, with 21.7% of the fund invested in diversified bank companies and 14.7% in transaction and payment processing companies. Its top 5 holdings include JP Morgan, Berkshire Hathaway, MasterCard, Visa, and Bank America. Its expense ratio is 0.09%. Over the past 10 years, it has returned an average of 12.23% each year. Its return for the past 1 year has been 29.89%. Year to date, its return has been 8.68%. Now, moving on to VPU, the Utilities ETF, and this is an ETF that we own. So VPU focuses on the utility sector, which includes companies that provide essential services like electricity, water, and natural gas. Big names like Duke Energy, NextEra Energy, and Southern Company are in this ETF. So why would you invest in VPU or any type of utilities sector ETF? Well, this is because utilities ETFs are considered defensive stocks. That means they still tend to perform well during market downturns. And this is because people need electricity, water, and gas no matter what. Now, VPU is a really good investment because it provides steady dividend income. And because of this, more conservative investors tend to rely on VPU to diversify their portfolio for those uncertain times. So the key benefits of investing in VPU. If you are looking for stability, consistent income, and lower volatility, VPU is a great ETF to look into. So VPU has a holding of 69 companies with 60.9% of the fund invested in electric utilities companies and 24.4% in multi-utilities companies. Its top 5 holdings include NextEra Energy, Constellation Energy, Southern Company, Duke Energy, and Vistra Energy. Its expense ratio is 0.09%. Over the past 10 years, it has returned an average of 10.42% each year. Its return for the past 1 year has been 23.06%. Year to date, its return has been 9.53%. Next up is VGT, the Information Technology ETF. And again, this is another ETF that we own. So this one focuses on companies in the tech sector. It includes companies like Apple, Microsoft, and NVIDIA. We all know that technology is one of the fastest growing sectors, and VGT gives you exposure to those trailblazing companies that are shaping the future of our world. So why is VGT so appealing? Well, technology is really driving innovation, from cloud computing to artificial intelligence. And by investing in VGT, you can ride the wave of technological growth without having to handpick individual companies. Tech companies also tend to have very high profit margins and can generate significant capital appreciation. So the key benefit to investing in VGT, if you are looking for high growth potential and also investing in companies that are driving global innovation, VGT is a great ETF to look into. Now, for VGT, it has a holding of 319 companies with 30.4% of the fund invested in semiconductor companies and 21.8% in system software companies. Its top 5 holdings include NVIDIA, Microsoft, Apple, Broadcom, and Oracle. Its expense ratio is 0.09%. Over the past 10 years, it has returned an average of 21.36% each year. Its return for the past 1 year has been 15.71%, and year to date, its return has been 6.9%. Now, like I said, VGT is a sector ETF that we own. If you want to see our full investment portfolio, the same one that helped us retire before the age of 40, check out our 365 Days to FIRE program. You'll get a personalized FIRE plan, including your own investment plan and monthly live Q&As with us. Plus, you'll get to join us and hundreds of others in the program in person here in Portugal to celebrate your FIRE journey. To learn more, go to 365daystofire.com. We'll also leave a link in the description below. Last but not least, we have VIS, which is an industrial ETF. Now, this sector focuses on companies in industries like manufacturing, transportation, and aerospace, including names like Boeing, Caterpillar, and Union Pacific. So why should you consider VIS? Well, the industrial sector is crucial to the functioning of an economy. And because of this, this sector tends to do really well during economic expansion. So when infrastructure projects or transportation demands increase, the companies in VIS generally benefit as well. So VIS is a really great investment for those looking to gain exposure in a diverse array of industries that support both economic growth and global supply chains. So the key benefits of investing in VIS. If you want to take advantage of infrastructure growth or you want to tap into the backbone of the economy, VIS provides exposure to key industries that drive economic development. So in terms of the numbers, VIS has a holding of 391 companies with 22.1% of the fund invested in aerospace and defense companies and 9.5% in industrial machinery and supplies and components. Its top 5 holdings include General Electric, RTX, Caterpillar, Uber, and Honeywell International. Its expense ratio is 0.09%. Over the past 10 years, it has returned an average of 12.21% each year. Its return for the past 1 year has been 20.55%, and year to date, its return has been 10.65%. So there you have it, 5 specific sector ETFs that you can look into further to see if it matches with your risk tolerance, your time horizon, and your goals to help your portfolio grow. And remember, if you want to see how we invest, how we built our FIRE plan, how you can create your own custom FIRE plan and investment plan, you have to check out our 365 Days to FIRE program. You'll get access to our full investment portfolio, a step-by-step plan to reach financial independence, monthly live Q&As with us, a community of people working towards FIRE just like you, in-person meetups in Portugal with us and hundreds of others in this program along with you, including our 2-day FIRE conference and exclusive FIRE gala and more. To learn more, go to 365daystofire.com. We'll also leave a link in the description below. And finally, I hope you find this video helpful as you explore the investments that work well for your portfolio in your own financial independence journey. And of course, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.